Brought to you by Refi. Refinance your defaulted private student loans today at yrefi.com/Ramsey.
So my wife and I, we graduated college. We both borrowed about $100,000 in student loans, and now each of us, over the course of it, we've got about $200,000 each in debt. So we've got about doubled interest, and just trying to see about refinancing, just what options, just some guidance.
So just to clarify, you both borrowed $100,000 each, and over the course of time, both of your $100,000s have doubled, and now you owe $400,000. Is that correct?
Yeah. So it's that sounds right.
How much time? I'm just curious.
So we got our associates, which took 2 years, and then finished a bachelor's, which was 2.5, closer to 3 years, just how the semesters worked out.
Mm-hmm.
But it doubled in that amount of time?
Yep. So over the course, I don't know exact specifics of my wife's, but myself, and it seems like a bunch of people that I know, they're in the same, with
it's
the interest rate.
It's because your payment isn't covering the interest, and so your loan is not moving. You're paying payments, but your loan is not moving. The total is not. It's growing.
My minimum payment is $2,800 and something,
Ooh.
and that's only did the math, and I'm only it's only $500 of that is going towards the principal.
Yeah, exactly.
So
okay,
$2,300 is going to interest.
Mm-hmm. Tell me about listen, this is a lot of debt. We're going to help you out. Tell me about you guys' income, because I'm hoping that you've got some jobs that are paying.
Yeah, so I'm a pharmaceutical rep. I make my base, I make about $130.
Okay.
But I am projected I should make over $300 this year.
Okay. What about your wife? Excellent.
My wife, she stays home with our daughter, and she's currently pregnant again, so she'll be just a stay-at-home mom with our children.
Well, let's see about that. So what was her career before she stayed at home with the kids?
She was an office manager for a dental surgeon.
Okay, and what did she earn doing that?
Probably $45,000.
Is that what her $100,000 degree was for?
Yes.
Okay. So there is a part of this equation, we'll get to it in a minute. There is a very real part of this equation where she would be working in order to help out with this, and there might be a daycare situation there, because you guys have a lot of debt. I was hoping that you were going to say you made $300 and your wife made $200. You making $300 is really, really good, but just the $400,000 in student loans, I'm guessing there's debt other places as well. Am I right?
No, we rent. I have a car.
Yeah, tell me about that.
Payment. I just I put $0 down. I have the good credit.
Yeah, but tell me, what do you owe on
credit
it?
Cards. It's what I owe on it. I think I owe $28,000.
Okay, what about your wife's car?
It's paid for.
Okay, anything else? Credit cards, HELOCs? Tell me any other debt you have, because it plays into this.
Just student loans, and then just my car.
Okay, so $428 is what we're looking at. You're making $300. So this is kind of like the person who makes $60,000 a year but owes $160, right? The ratio is the same. So there is going to be a level of sacrifice if you want to get out of this quickly. You could talk to my friends at Laurel Road. They offer student loan refinancing for high income earners. And so you have the opportunity that maybe you could get a lower payment at a lower rate. What's your rate right now, your interest rate?
So I have 12, is it 12 different loans?
Uh-huh.
I think I have 12 because I went, I went spring, summer, and fall.
Yeah.
And
but they're all different.
Anywhere from 11, they're anywhere from 11, to say 11 to 14 and some change.
Listen, so, I talked to them because a lot of what they're offering is 5% and lower. So I would do that.
Jesus.
I'm not saying that it'll happen and that you qualify, but I would definitely look into that because for you, it sounds like you could actually be a good candidate for that. Because what I'm always looking for with student loans is a way to lower those minimum payments so that you can focus more of your freed up money on the smallest debt and knock it out. Because with these student loans, even though you have this grand amount, it's still, like you said, broken into a bunch of littler loans. So if you do the debt snowball, which is what we teach, you're listing all of those little loans from smallest to largest. And
and knocking off the small
right.
ones, the bigger and the bigger.
That's right.
We actually in high school we did a Dave Ramsey like our math class. We had the whole, took the whole Dave Ramsey course.
Yeah.
And so we already have we already have over 10,000 saved, but it just the payment's so much that it's if you don't pay more than just the minimum payment of $2,800,
and that's
you're
right,
gonna pay on it literally forever.
That's right. And if you're not satisfying the interest within your payment, you're going to pay forever, and you're not going to see the loans go down. Because have you seen your balance go down? You told me you've seen it go up.
I've just seen it go up.
That means that is a clear sign that you had it in forbearance for a certain amount of time and the interest continued to accrue, or the ratio of your payment is not actually satisfying the interest. So the way to get out of that is to make sure your payment really would be your payment getting higher so that you're satisfying the interest and you're paying it off because money's going towards the principal. So again, I rarely say this, but I would contact Laurel Road and see if you can get a lower payment. And the point of a lower payment and lower interest is not so you can keep your debt around forever and be comfortable with it. The point of it is so that, like I said, you can have the margin to pay it off faster. And you're right, a $2,800 minimum payment. Listen, Luke, I know how that feels. My husband and I had 280 of student loans, but 460 total debt. Mm-hmm. So I get that feeling. I'm right there with you. The good news is, you've got a good shovel. I do think that it could be worth talking about your wife going back to work. I don't know what the time frame or horizon of that is, but the solution to this problem is lowering your expenses, which let's talk about that for a minute. When you make $300,000 a year, in your mind, you should be driving the Tahoe. You know what I'm saying? In your mind, you should be going, I don't know, to a nice steakhouse. And in your mind, you should be going on vacations, but that's not going to be the reality for you right now.
I want to lean in on something. You just said something I think is good. Luke, if your wife, if you could just snap your fingers based on her degree, what she's done in the past, what could she make ballpark? Be conservative if she went back to work tomorrow. We had something sitting there waiting for her. What do you think she could make?
Probably 80 to 85.
That'd be a huge difference.
I'd have that conversation because let's say you put every bit of that take home to these student loans. You're paying this thing off a lot faster than you think.
Mm-hmm.
Yeah, that's what I actually just talked to her about that. The irony of this is she's a business economics guru, and I am an economics minor, and just going through school. No, we didn't qualify for any grants, help, or whatever. The only way we were getting through,
it's a racket.
Is doing it, and then you're like, well, that was a bad idea.
Yeah. You guys are poster children for this racket. The federal government, soapbox warning, federal government has turned itself into a bank. It was never intended to be a bank. The student loan program, make no mistake about it, is a bank for the government to make money off the backs of the people it is supposed to serve. And this couple is an example. So I'd get real aggressive. Try to knock it out quickly because this stuff, you just don't want it hanging around forever. And please, if you're listening to this, don't go get a student loan.
Why Refi refinances delinquent private student loans for struggling borrowers. Learn more at yrefy.com/Ramsey.